Sure, I'm ready.
Hello, Torben.
Hi. Should
Nice
I
to
just
see you.
take it from here, or are you going to say anything?
Okay, I would like to welcome everyone on our webinar, and I'll give you the microphone.
Okay, perfect. First of all, I would like to say thank you for attending this webinar. It's a webinar on the basics of analysis. It's about chart patterns. And please feel free to ask any comments when you want. Use the chat to do that, and just write whatever question you have, and I would answer it as we go along. And I would also like to say before we start that this is for educational purpose only. So you might see that I have a target, something like that, in the charts I'm going to show you, but that is for education. That is not a recommendation for selling or buying or anything like that. That's for another forum than this is. But let's start. I would share my screen with you. I have a presentation here. And please let me know if it's a bother that I have the picture on, because then I would switch off my video, but let me know. So what is the takeaway from this webinar? You will learn how to identify different patterns. I would go through, I would expect about 80 to 90% of the patterns that you see the most in almost all charts. We would take a look at some of the more rare ones too, but this would pretty much be the basics. You'll also learn how to measure the different patterns targets. And finally, if a pattern fails, what is going to happen then? Okay, let's go. First of all, this is more or less 80 to 90% of the patterns you're going to see in any chart you open. They would be pretty much like this. And you can, I would recommend any of you to use this, take a print from this, find this on the internet and use this, open a chart, and then go from there to see what there is from different patterns. I won't go through all of this right now, because we're going to see them just in a second when we start the real chart show, but this is more or less 80 to 90% of what you're going to see in all charts you're going to open. So first of all, I found a pretty old one here. It's from 1936. It's from a company called Anaconda Steel. And what you see here is one of the more rare ones. You'll actually see this coming up frequently, but the most chart schools don't have this, because it's a head and shoulder continuation pattern. It doesn't mean that this isn't from the bottom. It's you haven't already seen the first part of the move, and now we have a consolidation, and then it takes off again in the direction of the new trend. So it was just to show you that you can find this all the way back. It's nothing new. It's nothing I have discovered. You saw this way back from when this started, and this shows that finding chart patterns works. Okay, I have a chart here. It's a clean one. I haven't done anything with it yet. And I thought that we would go through it, find some of the different patterns that is in here. I would go with only the bigger ones. There are lots of small ones in here too, but I would primarily go with the bigger ones. And I would try to draw some of it. It's not that easy to draw with with a pen here, but if we start in 2008, 2009, you can see my small red dot. This one down here, you will see a small shoulder and head pattern down here. This is often what you will see at a bottom. It could be much bigger than this, but this is often what you will see. You had a trend going, and then it turns around, and you will find some of the patterns you see, and it's almost always shoulder, head, shoulder. It's a double bottom, maybe a triple bottom. It could be a wedge going down, but some kind of formation telling you now is in this particular point here, it's a minus shoulder, head, and shoulder bottom you see. And to measure the target from this, you just take from the bottom to the neckline, and you will have the same distance here. And be aware, the target is not a fixed point where you can say this is going no further. It's a reference point. It says this is what you should expect, but it could go much further than this. And you can see in this point, I think it's what, triple or 4 times as big as the shoulder head, shoulder bottom down here. So the next one I can see that just jumps into my eyes is this one. You have a bull flag. You had a nice rally. You had you needed time to breathe. And actually, you can see this is a weekly chart from the Norwegian Airshot. The first part of the move, the uptrend here, took about a year, a bit more than a year. And then you had 2 years, almost 2.5 years of just going down in this bull flag before taking off again. And nice strong move up to the next point in about the middle of 2013. Here again, you have a nice big consolidation. And if you call it a wedge or another bull flag, it doesn't matter that much for me, but I would say this is a wedge or a bull flag. And once again, once it breaks out from here, you have two nice rallies with a small counter in. And then something is happening. Something is going on up here. You can see the volatility starts to rise sharply. Something is happening. The moves gets bigger, and we are going up and down more frequently than we have seen at any point since late 2008. So what's going on up here? This one is a nice big shoulder head, shoulder top. So, and you can see here that when we break down, once again, you can measure from here to here, and we can take the same distance down here, and I think it would be around here. So you can see we didn't quite make it right here, but still, after going up, making not even a back test of this one, we started down in U, and if you see this one, you have an even bigger shoulder head shoulder going on with the head up here. And once again, the measurement is from the top to this. And actually, as you can see, this is from the point of 22,000 to 10,000. And if you take that away from 10,000, you would get to minus 2,000. And if that's the case, this company would be bankrupt. So it's likely not the case. It would be something down near zero, but not necessarily at zero, but we could get pretty close to that. And you can see we have the distance right now, and this is down to here. We have a small formation here too that we can take. I would call this a triple bottom. It's not that beautiful, but still it's there. And you had the measurement once again, same way to do it, from the bottom to the top, and then up here. I think it falls a bit short from the target, but once again, it's reference point, and be aware that when you get close, it's time to either get out or maybe just look into maybe go with trailing stop, something like that. So you will make sure you're not going into debit or losing money on a position that you have had that is a good one. Okay, so now, like I'm a chef in a kitchen, TV kitchen, I've prepared and I've drawn up here exactly the same as you just seen, and it's just more beautiful now. And I have come some annotations on it too, but pretty much the same as you just saw. And this is how I would go around working with this. Take a chart from scratch and then go around looking for what is going on here, what can I find, and you will actually see points here where you have a smaller contraction or decline. If you want to go down and do even the smallest one, I think it's too much to do it with that. You need the bigger ones. I like to stay in the trend as long as possible. So I would not be interested to exemplify this one and say, okay, the distance here from here is up to this. I'm much more like this one, saying, okay, this is a real big bull flag. This will give me a real big move afterwards, and not this one. But that's up to you. Find out how it works for you. This is a weekly chart. You could go down to a daily, you could go down to a 4-hourly chart, you could go down to an hourly chart. It would be pretty much the same. The further you go down, the more noise you will see, but still the patterns will be the same, and you will find it all around. I've taken these longer charts because it's easier to find different patterns from here, but still it's almost the same even if you go down, and even if you go up to monthly, it becomes much more easy, but you need a longer term chart if you want to look at a monthly chart. Okay, now we don't want to go around and find everything here, so I have already drawn up here, but this is one of the more rare patterns, a diamond top. You can find them in the bottom too, as a diamond bottom. And actually, as it is with the shoulder head shoulder, it can act in the middle of a trend too, as a continuation pattern. But this one, again, the measurement is from this high to this low. And once it breaks out, you should see the same distance traveled to around here. And you can see we went further than that. And actually, if we have a shoulder head shoulder bottom here, we have a neckline and it breaks, and this should have taken us to around this high. But you can see we only get here, and I would call this a failed pattern. And it does that when we break below the left-hand shoulder's bottom here at this point. And when it breaks there, we have a failed pattern. And then instead of going up this distance, it should go down the same distance from around where it breaks. So it would be around here and should be to something like this. And you can see that's pretty clear where we have the double bottom later here. So just clean up this one. So we have so if we lower, we have a bear flag in this point. You can see the flag is going in the opposite direction of the trend. The trend is going down. And then you have a consolidation going the opposite direction for a period before breaking down again here. And normally you would see that the distance going once more should be the same as you have seen already. So it will be around this distance from this point, and this should go down to around where you have the bottom down here. Once again, you can find more patterns than I have taken out here, but still I've taken those that for me makes the most sense. I have a double bottom here. It could be the end of this decline, more, but still, as we saw in the prior picture, the shoulder head shoulder down here is pretty small, but still it could be the bottom. We see the, once again, the distance or the target for the calculation is the distance traveled here. Didn't quite get it before it breaks down here again and continues. And what you see also in all of this pattern is that you have lower lows and lower highs all the way down. So until we get down to this final part here, down here, we get a shoulder head shoulder. Normally, I would have expected this to be the again. We only just before it went lower as we got the coronavirus and moved into a fall in up to early March. Where we got a stronger dollar because nobody really knew what was going to happen and everybody was going to safe haven. And in troublesome times, the US dollar is a safe haven. And if this was the final bottom down here, and if we move, it's the same one you have over here. And this, again, here you have a small double bottom here to begin with. Nice big rally out of this low, followed by the shoulder head shoulder, as we saw in the Anaconda steel chart from 1936. This is a continuation because we already have the trend in the move. Same movement to around here. And this overshot a little bit, and then you had a bull flag here, and you should expect something like this to happen at the other side again. So from here to here. Then some continuation. You have a nice double bottom going on here, and the measurement has already been fulfilled. The wrong it could be that it will wait here, but we're sure of that. It could also be that we are going to have before this trend is complete. But here, possible break. This one hit. Okay, let's move on to the next one. This one is Tesla, also pretty interesting. Once again, this is a day chart. We started in March 2020. This is not a full shoulder head shoulder, but only half of it, but still it works. And the measurements are actually the same. So there's no difference from this. The distance you should expect to see is this one, as we already saw here. and you can see it went into some sideways trading like a pennant. And normally, if you see that, you should expect, again, like the bull flag, the distance travel from the bottom, as this is a flag, as a pole here, when it breaks, you should expect the same one to be seen over here. And you see another small pennant here. So actually, this just, you don't see anything indicating that this might be a troublesome time. And the uptrend, all the time you're going to, you're seeing here higher highs and higher lows. There's no way it has been broken in this complete uptrend until now, and still hasn't. Now we are up and near, I think, 800, 900. And still we don't have anything indicating that a top is placed. And if it is, we should expect some kind of top formation coming, and we don't have that yet. Actually, we just here in going out of 2021 saw the breakout of this triangle, nice symmetrical triangle, nice big thrust out of this, and still going higher from here, and could do so, yeah, for much longer. I think it's the pricing of Tesla is a bit crazy, being worth more than all the big car companies together. But it's not my job to say when the top is in. The market is going to tell us that, and they're going to tell us that with some kind of formation. And normally, if you see a bottom or a top, you're going to see increased volatility. And especially if it's up and after a big move, as we have seen here, you're going to see increased volatility, and as it forms some kind of a top. If it's going to be a shoulder head shoulder top, it could be a double top, triple top, I don't know, but some kind of top is going to be seen at some point, and that this trend is over, and at some point you're going to see the market make a lower high and a lower low, breaking this formation that we have right now. Gold here, same point. You have a small double bottom down here going up, and then you have a long-term rectangle. And this is pretty common too. These are most seen in stocks and in commodities, and you see it right here. And at this point, it's pretty common too that it ends with some kind of a cup and handle, as you see here, and then takes off. Pretty odd because of the low, but still regained the uptrend from here, and that is what the market sometimes does to us. When we least expect it, it does something else. This could, if you saw it on a hourly chart, something like that, be some kind of diamond formation actually going on in here and bringing higher. As I said, this could be the middle of a trend, and then you should expect this distance to be traveled at least one more here. And now you see a bull flag indicating that once this breaks around the 1900, we should see more upside. The question is, if the bull flag is finished, are we going to see one more down before we're going up? But this one would indicate that once this is complete, that the uptrend would be regained, and we're going to see much higher levels, about the 2100 up to 25, maybe 3000. Let's see, this is 500 points, and when it breaks, up to 2400. So much more upside to be seen. Okay. Next one, most of you know it. Back to, this is a real long chart, back to 1872. Nice long uptrend. Only one time did we see a break of the, where you had the higher highs, high lows, continuous, except for here. This is the 1929 crash. But from then it just took off again. And just to show you that this point, actually the 1929 here wasn't broken before 1954 again. So that was about, what, 25 years within this pattern below the 1929. So if you bought there, you would be in trouble. But that was happen. That is what happens sometime. Again, wedge, bull flag, another bull flag, an expanding triangle, one of the more rare ones, but they are there from time to time. This one is a wedge-like thing too, a really rare pattern. But once they look like a wedge, but instead of breaking down, they breaks higher. And when they do that, they are really, really strong moves from there. Another triangle from 2000 going on. And now we are seeing, we should see something like this on the other side here. And maybe we are near some kind of a top, I don't know. We haven't seen any indication of top here. We could easily go higher. But maybe something is going on, and at least some kind of a temporary break in the market again, because we have reached that, would be likely and possible from here. All of this uptrend has primarily been driven by the excessive money printing from the central banks. But then again, they are much bigger than we are, so there's no reason to fight the trend. The trend is up. We can go higher. There might be something going on here because we are seeing more volatility, but we don't have any view yet of a possible top formation. So maybe higher. We don't know yet, but the trend is up, and it's clearly up and has been so for now, yeah, almost 100 years. Okay. I don't know if I've skipped some of your questions around there. I have one here. Tesla had a 5-to-1 split some months ago. Is that present in that chart? Yeah, all the charts here is regulated after a split, so you would see them with the split in, just that you would have the price regulated into that. So yes, that's in here, so it should be no problem. My question is that how fast can I get this? Does it matter to get everything from this? I'm not sure what you're meaning, Drao. Could you please elaborate on that? Okay, I would place the questions box over to my left so I can see if you're writing something. Okay, this is a, let's go on until I see more. This is a chart of Brent crude oil, almost the same as crude oil from Texas. Just the prices is a bit different, but just to have something other to see. But again, you have this diamond top formation, and let me say, when you look at formation in real time, they can be pretty tough to discover before as they unfold. But normally, if you just draw some trend lines, as I normally will do in this one, I would be looking for something here. Actually, maybe going this way and saying, okay, something is wrong with this one. So I would end up with this part already. So this could be some kind of a expanding triangle. Expanding triangles can be top formations too, but normally they would indicate that more upside is coming until we see this one. And the place where I can say this one has broken for final is around here, when we see we have this top, we have a bottom that breaks the forward bottom. So something is going on. We have more volatility. But here we have lower low, lower high, lower high, lower high, and we break here. This is the important point. When it breaks there, you know that something is going on, and you can probably see this, or you get an idea that this was a diamond formation going on. And again, target to look for is this to the downside. No problem reaching that. And then going down, had a nice shoulder head, shoulder bottom here. And actually, you reach that target up here, almost exactly, bit above that, before going down again. And as you can see, this is turning into a very big wedge-like decline. And now we have seen cup with a handle, indicating that now this whole move from 100 and I think it was 47, sorry, is complete, and a new trend is beginning to the upside. And we are going first, the target for the cup and handle is up here around 75. We would likely see a small a temporary pullback, maybe just going sideways for some month and then take off again up to 75 as the first target. And later on, we're going to take all this, all of the wedge back, because the normal target for wedge when complete would be back to the start of it, and it's up here at the 147 target. But that could take years. This one, from where it peaked in about 2011 to 2020, that's 19 years. Normally going back or taking back all this would take half the time than it spent within the wedge formation. So it would be around 9 years, something like that, 9-10 years. So in 2030, we should be back up at 147 again. Okay. This is a stock, Rio Tinto, from Australia. And this was intended so you could see the, again, we have a downtrend coming here. We had a shoulder head, shoulder top within the trend. So it should be a continuation. It failed down here. And when it broke up here, first you had the break of the uptrend, downtrend around here. And when you broke the shoulder, you knew that it was this was a failed pattern, and instead you should see a distance as this one travel from when it breaks here. And you had another fail one here. same stuff as here. This is more clear. And went up, and now you have a shoulder, head, shoulder. So this is one of those charts that's just filled up with shoulder, head, shoulders all the way. Actually, you have a small shoulder, head, shoulder pattern over here. 2, and you have one here. If you look carefully. So this one is one where you can find them all the time. And some charts like this with Rio Tinto is, I don't know why, but they are just shoulder, head, shoulders all over. And as soon as you see one, you could just go for it and say, okay, is this going to be a new decline starting? You have to break the neckline here. Didn't do that. Instead, it broke the right shoulder top, and you knew this was a failed pattern. You knew what the target was going to be, so this should be what you at least would expect. And again, at no point here did you break the series of higher highs, higher lows. Continues all the way. It looks good, still good. And this target is around just above 130. We're not yet there yet, but expect to come up there. Okay. Euro yen, also a very, very long chart. If we go back to just before 2001, we have seen a strong move up. Actually, we saw some kind of a triangle or flag, bullish flag here. Again, this distance should be traveled here too. I think it fell a bit short of that, but pretty close. And then went into this huge triangle shape here, complete around here. You can see I'm pretty keen on Elliott wave, so this is how we count triangles. They're going in 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. And they have 5 legs within them, A, B, C, D, and E. And once complete, you should follow the longer term trend, which is from this point still higher. It's up, so you should expect it to break out on the upside. And now it's about to break. So if we're going to see a move clearly above this 127, the target should be the same distance as we saw over here to the upside from here. And that's into this target area I've put here in a small box. So that would be my expectation for the coming years. As you can see, this one went on from 2001 to 8. So that was about 8 years. And this one could easily take 8 years to go to before we are there. This one from another index, the Shanghai Composite, and pretty much the same as we just saw. We have the first move here. We have the bull flag. And you drive to the upside once complete. And now it's went into another triangle here. A, B, C. Now we're doing D, and then some kind of E wave down here, and then higher again. That would be my expectation for this in the years to come. But we have more time to go within this, and where it's just getting smaller in this, but still we have no indication of a long-term top being in place here. So more upside coming, most likely. I think I'm getting close to the to finish. This is for corn futures, and I've chosen a different style for this one. Not all of those goes, but for some commodities, this is a good way to look at them. Just box them in horizontal boxes, almost same distance between all of them. And you can see it going back to 1971 when it went into this, it just moved sideways for a lot of years. In 95, we had some, it began way back in 97 with inflation. Had a shot up to nearly 570, back again to test the lower line, and then off again up to 828. And when it we don't really see a top here, I'm sure if we made it from a smaller time frame chart, we would be able to see a top here. But what it did was that it changed, and this actually was a wedge formation, pretty big one. And if you went into the market at this point, it would have been bad because you wouldn't likely come out before here if you took it from the long-term chart. But that was going on here, and we went back to the start of it, as I said, and that once you have a wedge formation, you would normally go back to the beginning of the wedge, and then you might start a new one. You can see you have a this could be a triple bottom here, and you should move the same distance and within here, so that would be up to about 570. And then let's see what's happened up there. You have some pretty decent resistance, and maybe move back just to gather more power. I don't know. I have no reason why we see corn moving so high at this point. It might be because everybody expects the corona to be complete now, and everybody starts to eat more corn. I don't know, but still more upside to 550, and then let's see what happens up there. And see, there's somebody on the chat. When can you tell if a bull flag is complete? Is the question. Actually, you can't do it before it breaks out from the top. Let's see if we can, like this one. You see, you have this flag here, and actually first at this point you can say it's complete, because you might see, as you have here, it could easily have taken one more step down here, still being within the reason, and then take higher here. So you have to wait for this. If you see some kind of, if we took this on a weekly chart or a daily chart, you will see a small shoulder head. Just let me clean this up so we better can see what's going on. So here we have a small shoulder head, shoulder bottom here. Shoulder, shoulder, head. So this could be a warning that this was complete, and once this breaks, you would go with this break up here and expect, as I said before, a similar move to this one. But you can't tell down here if it's complete. This could just be for going up here and then take a new drop within the flag and then move higher. But if you see a trend like this and the market starts to move sideways to down, as it does here without real trend, that is normally a bull flag, and you should expect it to move in the direction of underlying trend from 1995 here once it's complete. Like that. Yes, more. How does one avoid trading a failed pattern? Are there any tools to combine with pattern or certain price action to be aware of? Yes, there is. I'm not sure I have any. Yeah, you have it here. If you see, typically this is the RSI, and I use this a lot. What I look for is when the market does make a new bottom, but my RSI doesn't. If it's a bottom, it's positive divergence, and the RSI is a leading indicator. So it's prior, it makes a bottom prior to what the market does, and it makes a top prior to what the market does. So in this case, it's a small one. It's you should look pretty close, but you have an indication here that you might get close to a bottom, like you see here. You can't say that this is a bottom. You have to wait for it to actually show it's the bottom. This is again the weekly chart, but at this point up here, if you take that one or up here, or maybe even as you see this move to the upside down and then break up here, you in my view, you say, okay, this could be the completion of this and start something new here. You see here again at the B, you have a top, and this is actually a bit higher, and it's for this one. So you have now a negative divergence, indicating that you might be near some kind of a top. Still, it could just be because you're moving into some kind of consolidation before moving ahead again. But it could be a warning that this is going to happen. And when you see the break over here, you know, okay, this was finished, and this was a top pattern instead, and you had a warning over here. So normally I wouldn't trade a formation within a formation. I would wait for it to break out. But still, if you want to go, it's a long time to stay out, just waiting for this. But you could use this as an overall picture and trade it short term. That would be a possibility in here. Again, here you have this low. You can see the market moves lower, but their RSI moves higher, indicating that we are coming down. When you have this bottom, you should expect another price bottom, but not necessarily at the RSI, indicating that this is getting close to completion. And we saw here the first small shoulder, head, shoulder, and then a bigger one, having the target up here, getting exactly to that. And once again, you had a peak here, and the RSI leading the market. And when this one peaked, it was lower here. So you would go for the break of this trend, and when it breaks, you would have an indication that this is complete, and it might just be some kind of correction, but still you would expect something to the downside. And yeah, we can take this here too. You have a shoulder head, shoulder here, and we see the move down here to the bottom there. And again, down here at the low, you have the RSI diverging, indicating that some kind of bottom is getting close. You have the target and you have the long-term trend line. So this should be a possible low here. I don't know if you remember, but oil actually fell to below 1 or to below 0. Actually, it was near something like minus $30. So you got paid just to buy it. That's not normal, but that happened during that time. Very special, but yeah, sometimes that's happened. Okay, I'm getting this a little bit. I just need time to get it like stop loss, take profit, as well as resistance and support. I hope that we would be able to continue this webinar into more different one, because I think it's a topic for itself. All of those you name here, stop loss is a topic for itself, take profit, those two could easily be a topic, as well as resistance and support. I think they are topics for themselves, and it has nothing to do with the chart patterns as we are in today. So I hope we will be able to make a new webinar later on those topics. Okay, other questions? I don't think so. That's it. It's all for me. Oh, sorry. Can we identify chart pattern on a lower time frame? Yes, for sure. I don't have any lower time frames right here. Maybe I can do something like this, if it's okay, and share another screen, like, hang on, just see, like this one. Just have to update it. Okay, so this was the chart we saw before, but actually we could go and look at, hang on, I would take one of those I know, and it could be, let's take, this is the 4-hourly chart on the euro dollar. Actually, I showed it before, and you asked if you could see chart patterns from this one. And as you can see down here, this is, as I said, the 4-hourly. You can see that up here, and you can see it clear shoulder, head shoulder down here, and we can make it even shorter to the, let's clean it up, make a new one. Go down to the hourly, and you can see if we take it down here, this is the latest we have seen. This is a trend from where we peaked, going down here. We have broken that trend. So we are currently seeing this one. Let's take those away, and you have a shoulder and the shoulder here, and the head down here. So we have a shoulder, head, shoulder pattern. Target for this one should be up here, 122.67, but it could easily go above that. And the stop, if we're going to take that, would be here, if this one breaks, it should go the other way. So say we have already seen a break here, but we can't say yet if it's okay because we have moved down below it again. It could be a sign of weakness that this wouldn't be a proper break, but we can't say yet. So if this one is going to fail, this one would be, instead of moving higher, it would be to the other side. Let's do it this way. And then instead it would be the other way around to down here at 119. So I hope that makes sense. This is a live one. This is a live chart I'm showing right now. So as I see it right now, the US dollar isn't finished to the upside. I would expect more to come. I'm not sure if we're going to see new highs, but from this, I would say that the correction that we have seen from up here at 124 is complete, and we're going to the opposite side now. Actually, we could let's take the RSI in to see if we have divergence at the bottom. I would expect that we had that. See, we had a low here. Let's take this away so you can see. We had the low at the RSI here and the price low here, and you had a divergence between the two here and here. Actually, we had it on the top here too, from here to here. So when we had that one, we will get a warning now that this, when this didn't actually made a new high, that we were pretty close to some kind of a top. And then you had normal, you can make this even shorter. Going down to, let's say, 15 minutes. And you can see you had the uptrend. Let's first take everything away. You had the uptrend here. And you had a warning that this might be some kind of a peak going on here. And when you had that, you actually got a correction, and now it's moving up again. And you can see this is the shoulder head shoulder that we had before. Just about to break. So some kind of consolidation here before it goes higher again should be expected. And if it fails, this would be the target to protect yourself. Oh, sorry. Here. Stop loss. And possibly even go from a long position to a short position here, because if it fails, you know that the distance going from here to here would be around 119. So you will have about 100 pips in this one, and here from and the same distance up should be around 100 pips if it succeeds. Okay. This is not that I'm going to make any promotion for it, but this is Trading View. But I have another one from NetDania, but this is a Trading View, and I like this one. It's and I use them for all my charts. They are easy to use, and it looks good. I don't know if I have more time. Marina, Paul?
Torben, I think you covered everything.
Perfect.
If there are no more questions.
I think there was maybe one here. No, thanks. That's fine.
So, okay, I would like to thank you very much for your time. Thanks to everyone who participated, and we hope to see you on the next one, on our next webinar.
Yes, thank
We
you.
will keep you updated. Thank you. Have a great
Perfect.
evening.
Thank you. Have a great evening, everybody. See you.
See you.
Bye-bye.
Bye-bye.